It's time for people to understand that we are at the later stages of this monetary system, and these lower rates will benefit the top 1% as asset prices will remain inflated. Who's bringing all of that gold in, and much of it leaving the exchanges? Well, those are the insiders who are closest to the information. So the insiders are buying commodities and selling equities, and the mom-pop public is nowhere near commodities and all in on equities. And this is why the rich get richer and the poor get poorer, because the rich not only have the most money, they're closest to the information. They know the playbook.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for August 25th through September 1st, 2025, while supplies last. First this week, 1 ounce gold Britannia are just $60 over spot per ounce. Next, 1/10 ounce gold Canadian maples are only $35 over melt per coin. 1 ounce silver maples are just $2.89 over spot. And 1 ounce silver kangaroos are only $2.79 over spot per ounce. And with a 250 ounce monster box, they're the lowest priced monster box available. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our distinguished guest and good friend, Andy Schectman, CEO and President of Miles Franklin. Andy, thank you so much for joining us today.
Good to see you, brother. I don't know that I've ever been called distinguished, but we're going to run with that one today. So thank you, Elijah. It's always nice to be back with you, and it's wonderful to see you, my man.
Well, it's great to have you back, Andy. The first topic I wanted to discuss was the Jackson Hole meeting we have. And on our weekly market update, we often go over, the news that we saw in the last week relating to the monetary system, the bullion market, and all of that. The first topic, though, relating to kind of how the Fed has been operating. And we've been talking about this. You've been talking about this with my dad, Dunnigan, over the last few weeks about the fears of, the Fed not being independent anymore. And the Jackson Hole meeting, there was a lot of fears surrounding that with respect to Fed independence. And also Powell kind of suggested that there could be an opening for rate cuts coming soon. And the betting markets now have that, it's most likely we're going to see a 1/4 point rate hike in September. So your perspective on the Jackson Hole meeting and how it impacted the markets?
Well, I think that one of the things that I found very interesting coming out of that meeting, Elijah, is that Powell has more or less waved the white flag, if you will, against the battle, with the battle against inflation, and confirmed that they will no longer aim for their silly inflation target of 2%. Shift away from these dovish policies tied to I guess you could say, trying to pretend that inflation is under control. It's not under control, and I think really what they are looking forward to or trying to do is focus more on the labor numbers, which are ridiculous in and of themselves. When we saw, I don't know how many hundreds of thousands of jobs that were adjusted downward from May and June. And so in essence, it's a shift away from inflation expectations and now tying it directly to the labor market performance. I think what you can expect to see in that respect would be much higher inflation. And it's interesting that they're talking about lowering rates heading into what seems to be a very stagflationary environment where unemployment seems to be increasing. The numbers which we were told that represented strong labor numbers were a farce. And inflation really is far worse than what they are saying, as far as I'm concerned. You're talking, I don't know when the last time we've had a 2% monthly inflation number, and they'll never hit that target. So in essence, what you could expect would be much higher prices into a very weak economy. And, they talk about, this being a benefit for home prices as an example. Well, lowering rates isn't going to benefit new home buyers. It's only going to make the problem worse. That's what got us into this problem to begin with. So yeah, I think that the last thing really that this economy needs at this point, as far as I'm concerned, is lowering of interest rates, because it gets us right back into the same problem that we have been in all along, which is distortions of interest rates. The market should set the interest rate, not the bankers. And by allowing the bankers to do this, it's distorting asset prices. It's creating imbalances or misallocations between resource and capital. And this is the problem that we've seen over and over and over and over again, and that is not letting the market control the rate of interest and the cost of money, but thinking the bankers know best. They're late, and even doing it now at all, to me, is the wrong thing. This is the problem. We're boxed in, and they feel that they need to do this. But in essence, all we're going to do is distort things even worse. The rich are going to get richer as asset prices are going to go much higher. The economy is already slow. So for people who have already lost their job, or the lower income folks, are going to see much higher asset prices, or much higher prices in just the necessities that they need. So the wealthy get wealthier because they own assets, and the poor who don't own assets will find it harder to put food on the table, to drive to work. You're just going to see an uptick in inflation and an economy that is shedding jobs. The Bureau of Labor Statistics, the BLS, should just be called what it is: bullshit, BS. And the numbers that come out of there, whether it be unemployment or whether it be inflation, have misled the public for a very, very long time. And the numbers that they're telling us on inflation are actually much, much higher. You know this. Your dad knows this. We've talked about John Williams and shadow stats. He's been on your show, and he would tell us inflation's actually closer to 11%, not the 2.5%, almost 3%. The producer price index shot up last month, and again portraying higher and higher inflation. And really, this is going to light a fuse, if you will, under the costs of living expenses for the average American person. It's not going to do much to help the average American. What it will do is it'll benefit the upper 1% who have lots in the way of asset prices.
Now, with respect to Fed independence and de-dollarization, I mean, we've talked countless times with you about how there are efforts throughout the world to really de-dollarize. I mean, Iran recently, I think it was just today, announced that they are, there's this BRICS Green Fund, and they're now suggesting that people use their local currencies, right, in that fund. But with respect to de-dollarization and the Fed independence, do you see any connection there, that if these other central banks, who met at Jackson Hole, are concerned now about Fed independence, could that lead any more to de-dollarization throughout the world?
Well, when you talk about Fed independence, it's really a lie. It's a farce, because, you got Stephen Miran, who is the author of the Mar-a-Lago Accord. He's taking over supposedly for the position that's vacated. And now there's another Fed board member who is being investigated for mortgage fraud or something along those lines. Trump is calling for him to step down. You're going to see more people put into the Fed that will do the tidings of the current administration. There really is no independence right there. But what it really signals, I think, to the rest of the world is that holding dollars is very silly, that if you hold dollars, you'll end up going broke, because it's very clear. The Mar-a-Lago Accord and Stephen Miran's plan is to devalue the dollar. I've been saying that on your dad's show for the last 2-3 months, that their whole plan is to devalue the dollar tremendously. And so whether you call it independence or not, the folks that are being put on the board who will make the decisions, I believe, will make the decisions in line with what the administration wants. There is no independence. But this is all part and parcel for why you're seeing de-dollarization. Holding your assets in dollars is the surest way to go broke in an inflationary environment. Dollar's already down 11% so far this year. And this is a trend that I think will continue, not only just through de-dollarization, but also through the plans of this administration to have a weaker dollar with the intention of having it spur on manufacturing demand in this country, which is ultimately, I think, what they're saying they're trying to do. So yes, in an odd sort of way, it will enhance de-dollarization. And even though it appears outwardly that there is independence. The folks that are being put on the board are anything but independent thinkers. They will toe the line with the current administration. So it's just smoke and mirrors once again.
I did want to ask you about the bullion market. I mean, last time we had you on, you were saying that there were massive, there were a lot of investors standing for deliveries. I wanted to get your update on kind of the bullion market this week. Any new trends you've been looking at, and what should our viewers be paying attention to right now?
Yeah, I mean, the deliveries on the COMEX are extraordinary, Elijah, as are the offtakes off the COMEX exchange, which are extraordinary. These are very, very much aberrations. They're anomalies. We don't see them very often, or never have until recently. And I remember talking with your dad in 2020 about all of a sudden all of these deliveries coming into COMEX. They've only increased 100-fold. But when you talk about trends, Saudi Arabia is now, to my mind, the third government next to China and Russia who are, or maybe let's call it the fourth, India, China, Russia, and Saudi Arabia now. And again, these are all, these are members, whether admitted or not. Saudi Arabia is, in essence, in my mind, pretty darn close to a BRICS member in that they are a full participant in the M-Bridge technology. They are going to all of the BRICS meetings. They are very much have one foot in and one foot out to appease the West, but by all of their moves appear that they are going lockstep with the BRICS movement. They took a major stake in SLV, the silver ETF recently, and enough to demand physical delivery. Now, they haven't done it yet, but you have to have a certain amount, like it's a basket, huge amount, millions and millions and millions of dollars worth, in order to be able to demand physical delivery. This is a privilege retail investors do not have. They will. I find it interesting. We've talked at length about China flying around the world and buying doré concentrate directly from the miners in South America and Mexico. We've talked about India buying over 800 million ounces in the last 5 years. We've talked about Russia making it part of their national stockpile, which we'd never heard before from a government. And now Saudi Arabia is doing just that. And so when you realize that India, China, Saudi Arabia appear to be publicly accumulating silver under the guise of industrial uses, it's a lot more than industrial. Silver is really more strategic than it is industrial. You mentioned billionaires. David Bateman is the one that comes to mind. He came out recently and said, that just a 10% shift from gold to silver, where all the people investing in gold, if 10% moved it to silver, it would consume all newly mined silver globally. This is, implying a potential massive squeeze. He said, 1 billionaire won't do it, but 10 would. Or a 10% shift out of gold into silver. When you see governments like Saudi Arabia come into the fray, you know that it's coming. I found it very interesting. One of the things that I talk about a lot when we talk about the public not holding any gold, very little. My standard phrase I copy from Rick Rule. He says, from Joe and Jane Sixpack to the Harvard Endowment Fund, the average of gold owned by the public and gold-related equities is 1/2%. Well, lo and behold, the Harvard Endowment Fund just bought $101.5 million in GLD recently. And so now you have all of these institutions jumping into accumulating precious metals. Now, these institutions, I don't know how much they understand the difference between GLD and the real thing, but you look at Bass, his last name is Bass, I forgot, Kyle Bass, I think is his name. When he was running the hedge fund, I think it was for the Texas, the Texas Teachers Union, or it was a big fund for that. I believe that's what it was. It was a long time ago, maybe a decade ago, but he put all that money, like $1 billion into GLD, and they took possession of it as well. So I don't know if he intends to do this, or they intend to do this time, the Harvard Endowment Fund. But the very fact that they're buying $101.5 million in GLD tells you that gold and silver are becoming more mainstream, certainly more mainstream. And I think you'll see at this upper level on COMEX, sovereign wealth funds, endowments, that's one step away from the public, who is still kind of blissfully, whistling Dixie, not really understanding the significance of this. But the people who are very, very tied in to what's happening globally are making moves and standing for delivery. it's a big deal. To see the Harvard Endowment Fund jump into this degree is a very big deal.
Yeah, and that's what Rick Rule has talked about time and time again, that if just a small portion of investments move into precious metals, then that'll make a huge impact on the price. And it just has to move back to kind of the historical average to make a huge impact on the price. And as you mentioned, kind of the insiders are starting to move now. What is interesting as a broker myself is I'm still seeing really suppressed demand compared to what we've seen in the last few years. And that just again signals that it's not the public jumping in right now, and that, the catchphrase or the saying is that, you should probably get out of the stock market or whatever asset it is if your neighbor starts to talk about it. But we're not seeing any sort of talk in the mainstream or, talk amongst, just your friends and stuff like that who are bringing these topics up to you. You really have to dig deep, and it's really just the insiders right now who are moving into metals.
But that's why it's so bullish, because the insiders, this is how markets work. The insiders always lead the charge. The insiders don't just have the most money. It's not luck. The insiders are also connected to the information. And that's the most important thing. And if you understood the information and you see the people who understand the information moving in a certain direction, well, you should be doing that. I've talked at length over the last few weeks about the contrarian indicator. And let's just go over it once again for the chance that the few people watching this haven't heard me say this ad nauseum. And I apologize for those who have. But on one hand, you have the insiders dumping stocks, the hedge funds, the managed money has been selling between 2 and 4 billion a week since June. Buffett is sitting on between 4 and 500 billion in cash. You have a 7-to-1 selling to insider buying since the beginning of the year. You have the 3 or 4 largest board members of NVIDIA, huge stockholders selling cumulatively over $1 billion in NVIDIA shares. You have Bezos has sold over $6 billion in Amazon since June 1st. You got all of these insiders who have the information selling, right? At the same time, you have the public, which is all in the highest allocation to precious or to equities ever. More so than the great financial crisis and the dot-com bubble, about 54%. But if that wasn't bad enough, they have the largest allocation to margin play, the highest ever, over $1 trillion, and the largest allocation to options. So options and margin signal speculation and leverage. So you have the public all in on leverage and margin. At the same time, the insiders are leaving. But flip it over to the other side. You have the public, as you mentioned, very tepid in terms of their understanding or allocation to the commodities. But what do you have going on the other side? You have the largest deliveries on COMEX that we've ever seen, ever. And the U.S. has become net importers. Who's bringing all of that gold in? And much of it leaving the exchanges. Well, those are the insiders who are closest to the information. So the insiders are buying commodities and selling equities, and the mom-pop public is nowhere near commodities and all in on equities. What could possibly go wrong? And this is what I think people should take away, is that, this is why the big money always wins. They're positioned when no one else has any inclination. And by the time the people figure it out, the insiders have been comfortably positioned for a long time, and they're probably at that point start looking for their next great value that no one else is noticing. And this is why the rich get richer and the poor get poorer, because the rich not only have the most money, they're closest to the information. They know the playbook. Do what they're doing, not what conventional wisdom is saying.
It is just crazy to see again, like the low retail demand we're seeing when spot prices are so high, which is also just another signal that we're seeing a lot of the insiders moving into the market. And comparatively, if you compare this back to other bull markets in the past and the percentage moves that we've seen from low to high, I mean, we're nowhere near the top at the moment, at least in a lot of the analysts' opinions that I've been talking to. But what is your thoughts right now on that with respect to kind of comparing it to previous bull markets? Where are we at the moment?
We're nowhere near the top because the public has no understanding of exactly what is happening. This has been driven by central banks primarily and big money and whoever is taking possession here in the United States. But the public is nowhere near even entered into this at all. So no, I think that, to see a market move the way that it has without the public involved is rather telling. To see, what amounts to north of $100 billion delivered into the COMEX that we know of since the beginning of the year, what does that tell you? I mean, this has never happened before, and to see a lot of it leave the exchange, this has never happened before. And people at that level don't make moves like that unless they know something is coming. And I do believe that. I really do believe that. And so I guess I would say we're nowhere near the top. When you see, like, to your point, everybody talking about it, and everyone having allocation to it, well, it may be time to start thinking about this. But not only that, we're looking at lower interest rates coming, which of course benefit asset prices. And so this locks out average people as far as I'm concerned, because the average people, they don't own assets, and assets are what make the wealthy. Because, as they're going to choose a path of inflation, you're going to see everything pop up. You see stocks, real estate, bonds, gold, silver. All of these things are going to surge, in my opinion, at least at first. Now, what happens with the stock market ultimately is anyone's guess. To see all the people, all the big money moving out, to me, is very dangerous. But I think you will see cryptos, precious metals, those things are going to do very, very, very well. Hard assets in particular will do very well, because these are things that will protect you as your dollar is losing purchasing power. And, commodities right now are historically undervalued related to financial assets. So I would argue they're really the ones that are poised to break out. The system is under stress, Elijah, and it seems that to a degree reality is catching up. That's why the insiders are doing what they're doing. They do it long before the rest of us figure it out.
And every week, you really share with our viewers some of the deals we have going on if people are looking to take advantage of, investing in gold and silver at this time when it seems like a lot of the insiders are moving to that. Did you want me to bring those up for you here?
As you're looking for that, another interesting thing that's happening is the reverse repo market, which we talked so much about a year ago, has dropped from $2.2 trillion to $28 billion. That's a 99% draining of bank liquidity. And in essence, there's no cash left in the system. And with debt exploding, something is about to break as far as I'm concerned. So the Fed will print again, and real stuff like gold, silver will soar. This is a big deal because the financial system is very low on cash. And so when big institutions used to keep their money there, over $2 trillion with the Fed for safekeeping, now there's only $28 billion left. That's like a giant emergency fund that's been drained. And as far as I'm concerned, the U.S. Treasury, which is now flooding the market with bonds to cover its record spending, all that debt sucks cash out of the system, and now there's not much left in the system. So you're going to get big players like hedge funds and other leverage investors who borrow too much, who are going to find it very difficult to find cash. And if they can't pay their bills, they'll start selling everything, which could crash part of the market. So I would say to you, this has never been more important ever to own hard assets right now. And this is another reason certainly worth talking about.
Definitely. The first specials in silver are going to be, the first one is the silver maple leaf, one of the most popular silver coins, for $289 over spot at the moment.
Yeah, the silver maple leaf at $289 over spot is on par with what I sold them for the last 30 years. It's the purest silver coin in the world, and it's an amazing coin, and it's a great value right now.
In the silver kangaroo, a very similar coin, 49's fine as well, at actually just $279 over spot at the moment.
Correct. And the thing I like about the kangaroo, it comes in mini mint boxes of 250. And so you're right, it is the second purest coin, or is the only other 49 fine coin in the world, mass produced. But in mini mint boxes of 250, and a 279 over, you can't go wrong. That's as cheap as I've ever seen them.
And as for gold, we have two options here. The first one, the Gold Britannia, for $60 over spot.
That's cheaper than 1 ounce gold bars right now. It doesn't get any cheaper than that for a 1 ounce gold coin.
Definitely. And one of the reasons I like 1 ounce gold coins instead of the bars is they're government minted. They're more detailed in their engraving. And often people just prefer coins to bars often.
100%.
And with respect to the gold, we have really a very divisible item. It's 1/10 ounce gold maple leafs, and the price on those is $35 over melt per coin.
Yeah, I mean, and from a standpoint of functionality, if I had my choice, I might own all 1/10 ounce gold coins. They're very expensive in relation to 1 ounce gold coins, but they are a very, very good choice. They're amazing because of the utility. If whether you're playing poker with your friends or driving on a crowded highway, you can never be too flexible, or investing. And at $35 over melt, that's as cheap as I've ever sold them for.
And I had a call from a client just recently, actually, that was really heartening because so many of the calls are from clients who have not worked with reputable dealers, or dealers who have taken advantage of them, to be really straightforward. And I guess just to our viewers listening, there's a lot of news on gold and silver out there, and there's a lot of people trying to take advantage of people out there. So whoever you work with, it's really important to work with a reputable dealer. But the call that I was referring to that I just got a few days ago was from a client who had just watched one of our videos talking about that, a lot of dealers will sell, 1/4 ounce gold coins at huge premiums. And she was just in contact with one of those dealers and canceled out the order before she, when she still could, because she saw that video. So it was just great to hear that, really warning people about this has been very helpful. And just again, a reminder to work with reputable dealers out there. Any, updates on that, or can you kind of give us a rundown of the importance of, really being cautious when buying gold and silver?
Well, one of the things that differentiates us from other companies is that we're licensed and bonded, and Minnesota is the only state in America that does that. Even though I live in Florida, where we've had an office for almost 2 decades, our corporate office is still in Minneapolis, and we are licensed, bonded, and background checked annually by the Commissioner of Commerce in the state of Minnesota. Most companies won't do business in Minnesota as a result of that. It holds us to a higher standard. And so there are a lot of companies out there, because this is a federally non-regulated industry, that would choose to really do things that, in my opinion, are criminal. Those are the companies that we've referenced over and over again. I never mention their names, but when I tell you it's criminal, it truly is. There are things that I have seen and you have seen that are absolutely heart-wrenching. And reputation is very important. But if you're ever being sold products like those 1/4 ounce coins that you can't readily find on other sites to check the prices, you're probably in bed with the wrong company. So always a good idea to make sure that the products that you're getting, at least to build your initial portfolio, would be coins that are readily priced on every website across the country. 1 ounce eagles, 1 ounce maple leafs. You're going to buy a 10th ounce coin. It's a maple leaf. It's an eagle. It's easily checked. And if you do that, you'll never run into problem. And those companies, as far as I'm concerned, have done things that these companies should not only be put out of business, the people who are running it and their salespeople belong in front of a court of law. And I'm not being sensationalizing. I'm not sensationalizing this. I am being serious that these companies are making 100% markups or 200% markups. And when, as you know, working with Miles Franklin for a long time, if you make 2 or 3%, that's a lot, not 200 or 300%. So yeah, it's a real deal. For those people who have bought 1/4 ounce coins between $1,000 and $1,300, or silver coins that average between $60 and $90 an ounce, give us a call. We'll tell you what to do. We'll evaluate your position and see if we can help you get yourself out of these problems, because they're real, and we've had good luck helping people.
Fantastic. Well, Andy, really appreciate your insights. As always, is very helpful for our viewers every week. Any last thoughts before we let you go? Some of the maybe the news that you've been looking at. Any last things that you wanted to bring to our viewers this week?
No, I think we've covered the most of it, Elijah. This is kind of a short week news-wise, but I just think that things are going to start to get really interesting. I really do believe that, especially as we head into the fall months. Typically, September on are the biggest months for precious metals. You get all the people in Europe coming back to work. But when you see the positioning the way that we see the deliveries off of COMEX, the big money accumulating commodities and shedding equities, the talk of lowering interest rates into a stagflationary environment, the abandoning of the dual mandate by the Federal Reserve. We're on the cusp of some big things. Holding your money in dollars right now, you're going to be a victim, or you're going to go broke, one or the other. And I think it's time to be a contrarian. It's time to look at things a little bit differently. The CPI has stayed above 2% for 53 straight months. The PPI inflation metric is at a 3-year high. The labor market revisions, they revise, I think, like 460,000 jobs just in May and June alone. And so, now you're going to embark upon a money printing and lower interest rate environment. You're talking inflation up the yin yang. It's time for people to understand that we are at the later stages of this monetary system, and these lower rates will benefit the top 1% as asset prices will remain inflated. And I just think that, if you had higher rates, it would correct valuations. It would make it much easier for people, regular people, to afford things like homes, and they're going the other direction. And these policies are, in essence, what many people would call wealth transfer tools. They're not economic equalizers, they're wealth transfer tools. And you're going to see the big money become wealthier because their assets are going to go through the moon, through the roof. I really do believe that. And that's probably why you're seeing so much in the way of commodities being accumulated by the big money before the average person realizes it. So I guess I would just simply say inflation is gathering speed. And the Fed is cornered. And if you're not holding hard assets, you're probably losing purchasing power. So this is the time to do it, as far as I'm concerned.
Yeah, and so many people ask the question of you, how much of my assets or how much of my wealth should I have in precious metals? And I kind of flip the question around is, how much do you want outside of the least risky asset in all of human history that has never gone to zero? And when your other assets are in dollars or whatever that is being inflated away, I mean, you have to kind of turn your whole thinking on its head. We really have to kind of rewire our brains almost.
Yeah, well, the problem is that most people won't catch on to it until it's too late. That's why the big money has been positioning while people are completely misdirected elsewhere. But that's how it always goes. That's why the big money is always, how the hell did they know that? Well, because they have the information. And that's why they are quietly tiptoeing, leaving equities going into commodities as the public's all in on leverage and margin. And that's just, if that isn't a contrarian indicator, I don't know what is. So yeah, trust your gut, I guess, would be, as I've said on your show before, trust your gut. It's the best financial advisor you'll ever have.
All right. Well, Andy Schectman, we always appreciate your time this week. Well, thank you so much for your time. You have a good rest of the week, and God bless.
God bless you too, brother. Thanks for having me, Elijah.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for August 25th through September 1st, 2025, while supplies last. First this week, 1 ounce gold Britannia are just $60 over spot per ounce. Next, 1/10 ounce gold Canadian maples are only $35 over melt per coin. 1 ounce silver maples are just $2.89 over spot. And 1 ounce silver kangaroos are only $2.79 over spot per ounce. And with a 250 ounce monster box, they're the lowest priced monster box available. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.